Market performance and investor psychology are dependent on each other. In order to survive in the markets, you must first understand the basics. Watch the video till the end to get one step ahead of the crowd. Let's take a scenario based approach. In a bull market, investors willingly participate in the hope of obtaining a profit. People become hopeful, optimistic, thrilled, and then euphoric, and finally, early investors cash out and bear market comes in. Market sentiments turn negative, and everyone tries to get out and sell and cut loss and exit. One of the uniting forces common to any kind of market, be it crypto or stocks, is emotion. The dual emotions of fear and greed dominates the flow of any market. If you have followed crypto markets, you will observe distinct cycles. Parabolic bull run where almost all crypto assets go up like 10 to 100 times, followed by a bear market with an almost 90 to 95% correction, sometimes even more. Now let's try to understand the sentiments in more details. Before a bull market starts, people who are already in the markets are in disbelief after the previous cycle. Once things start going up, they gain some hope and expect some recovery. New people start gaining curiosity and start coming in. People become optimistic. This is when the early majority comes in and believe that everything will go up. Markets confirm, things start going up, there is no sign of stopping, people become thrilled. Everyone, including your parents, relatives, neighbors, friends, even your ex, start talking about the markets. Big brokerage houses set high price targets, news channels start publishing positive news about everything. Moon, Lambo, space, Pluto, Mars, retirement, private jet, private yacht, you name it. This is when euphoria sets in and people become irrational with high price targets. Because of greed, retail traders do not see that the trend has likely ended and will reverse. Smart money which got in early, cash out and markets start falling. People still believe it's just a correction and markets will recover. This leads to a complacency phase. Once there is no sign of recovery, a lot of people become anxious and start seeing their first loss and goes into denial. My investments are with great companies or projects. I will be in for the long term, and they sit with double-digit losses. Markets go down even more and panic sets in. Big influencers, news channels will probably tell 1,000 times Bitcoin is dead. The stock markets have never seen this kind of a bear market in the last decade. Fear will set in and they will capitulate, panic sell, or just give in. Depression sets in and market participants become angry. Once there is a slight rally, they will be in disbelief and this starts a new bull cycle all over again. Retail money always lags behind smart institutional money 95% of the time. Even though understanding markets are not complicated, understanding a market cycle can sometimes be complex. This is because of the emotions that control market participants. We all have emotions and we need to keep them in check on each cycle. Usually a bull market often starts unnoticed as most of the people are already in disbelief because of the previous bear market. Could you relate any of these to the real life experience? Let us know in the comments below.